Hey guys, how's it going? So this is going to be my last video of the day and we're going to be talking about SPACs. SPAC stocks. I would appreciate a thumbs up for this video. You don't have to give it to me if you don't want to. The pre-market right now is looking pretty nice. It's green. Europe, Asia is not open yet, which is slightly strange. It should be open by now. But anyway, so the market is green. This could be a bottom. We could see a bottom, and we could see a rally back in October. Maybe. I don't want to sound too optimistic. I definitely warn you guys to be careful because, we could still be in a downtrend right now. Is the downtrend over? I don't know. I hope so, because most people don't want to sell their stocks. People don't want to be holding cash, apparently. Some people might. Some people are like, oh, I don't care about the stock market. I'm just going to hold all my stuff in cash, wait for that market crash. That's a strategy too. But in this video, I'm going to be talking about SPAC stocks because they're safe and because they can't drop below $10. So that's why I'm going to be talking about some of my SPAC stocks that I think that could be good, safe plays, and if the market doesn't crash and it goes up, you could be rewarded a little bit. So the first one, Churchill Capital Corp 3. This company is merging with Multiplan, and I don't think the stock is going to crash, because even if it crashes, the worst case scenario, this thing goes slightly below $10. When it comes to volatility, this company is very safe because it's close to $10 and it won't go anywhere. It won't go too much down below $10 because the institutional investors that create this company, they cannot sell. They are locked in this company, and because shorts can try to take it down a little bit lower, but it'll probably just bounce back eventually to $10. So this is very close to $10, and this company sounds fantastic. Just Multiplan sounds like a fantastic company. And, if you look long term, you will probably make money, not 100% guaranteed, but I think this could be a winner long term. Am I going to invest into it? No. But like I said, this could be a good alternative if you want to diversify. I don't want to invest into it because I like stocks that move, and I think this company won't move because it's heavily diluted and it requires a lot of money to move this stock. As we can see, they have a total share structure of 110 million shares, so there's quite a bit of shares in Churchill Capital Corp, and then after the merger, it's going to be really diluted, probably I don't know for sure, but I'm guessing 400 or 500 million shares. Wait, I think this company is valued at $11 billion after the merger is done at $10. I'm not 100% sure on this. I haven't done too much research on it. I watched a little bit of videos on it, but that's about it. The second one, this is a company I like, and I do have an investment in it. It's not a huge investment. I'm actually broke even on this. I bought it somewhere around $11. I don't remember the exact price I bought it at. I may be underwater just a little bit, but this stock can't go any lower. I mean, it can go all the way down to $10, but besides that, last crash it went to $9.40. I really don't think the stock's gonna go any lower than $10. I could totally be wrong again, but that's just my opinion. So the worst case scenario, if the market crashed, this thing goes to $10. So your money is pretty much safe in buying a company like this, and I really like this company. I think that it has a fantastic business model. But that's my opinion. I'm not really gonna go too much into depth to this because I want to make a separate video for trying maybe sometime next week. Desktop Metal, but I really like this business, and the fact that it's at $11.13. It probably won't go down any further. Yeah, it could go down to below $10, but it just bounced off the 50-day moving average, and I think it's probably going to go back to 1250 eventually. I don't know, maybe I'm wrong, and maybe it just floats sideways here for a while, or maybe it'll just crash and go back down to 10. If it does, I mean, that's a fantastic buying opportunity in my opinion. Hennessy Capital Acquisition, I have zero position in this. I did have a position at $10.50, and right now it's $11.20. I was being called an idiot for buying this stock, and now it's at $11.20, so I could have easily made, I already sold out at $11. I bought it at $10.50 and I sold out at $11. Why? Because I thought the stock market was crashing, so I wanted the cash. So I sold out of this one, but I think this has, I don't know if according to that one guy that calls me an idiot, he basically says that, this company's management is super shady like Nicholas, so maybe you want to stay away from Hennessy Capital or Canoe. Just saying. But it's still safe because it can't go below $10, at least in my opinion, unless some, anything's possible in the markets, but I don't think the stock's going back down to $10. And then Pivot Investment Corporation, I bought a little bit. I bought about 500 shares of this. I'm gambling that it becomes the next Hyliion because they have very similar business structures to Hyliion. They basically put a battery pack into a car, reducing the amount of gas the car produces by using electricity. And that sounds great. But, at the end of the day, big money pushes stocks up. So if retail investors and big money wants to stay away from PIC, then it might just float around here for a while. But like I said, worst case scenario, the stock goes back to $10, which would make it a fantastic buying opportunity. GMHI, another one that I think is a fantastic buying opportunity. It's basically a self-driving car. Once they merge, the company is going to be called Laser, LAZ or something. I don't know, Laser. But this is a self-driving technology car company, and it's valued at $3 billion at 10. I don't think it's gonna go below $10. But again, this is an alternative. I do have a position in Gord's GMHI because the CEO is a genius, and I was gambling that this could be a big winner, and because of Graph. I saw Graph. Graph is also a self-driving technology vehicle company, and I was saw Graph go all the way up to $20 or $30. I thought GMHI could be the next Graph, but Graph is less dilutive than GMHI, and on top of that, Graph, when the merger goes through, I think they are valued way less than GMHI, especially I think they're valued this. I'm not 100% sure on this, but I think they're valued the same as GMHI at $20 as GMHI is at $10. But I'm not 100% sure on this. Definitely do your research if you want this one. This one's a little bit more risky because you could potentially make 50% or lose 50% because this stock can either go down to $10, which would make it a fantastic buying opportunity, or this stock will go back to $30 and get you 50% on your investment in the short term. So this one is an interesting one, but I think this one is also safe. This one's safer, may not make you as much money. You could potentially double your money if this thing goes to $20, or almost double your money. This one is 50%. But you could also lose 50%. So risk versus reward. We'll see what happens. Charge Points, SBE. This stock is, not really super risky. And, I really believe in charging stations because we are going to, in the next 10 years, by 2030, electric cars are going to be everywhere. And ChargePoint is going to make a ton of money because they are basically the gas stations for electric cars. So, you know, I don't think you can really go wrong with investing into a SPAC like this. Worst case scenario, it drops down to $10, which would make it a fantastic buying opportunity. You could lose a lot more on this. Is a little bit riskier one, but you know, it's good. I mean, it's a company that is definitely going to be in the future. I think it's future proof. I think my opinion. Kensington Capital Acquisition Corp, QuantumScape. This one is backed by Bill Gates, and you know everyone knows who Bill Gates is. He's like a super incredibly rich billionaire that founded Microsoft, and he believes in this company. And his company makes batteries, and batteries are absolutely necessary for car manufacturers in the future. So can you really go wrong with Kensington? I don't think so, in my opinion, but we'll wait. At the end of the day, we'll see what happens. Diamond Peak Holdings, DPHC. I like this company. High risk, high reward. This stock will either, it's risky because it could drop back down to $10. But it could also go to, I feel like this company is already undervalued. I think this company is undervalued long term. I think it deserves to be at least $10 billion market cap, the same as Nikola. That's just my opinion. So, but the risk is it can drop all the way down to $10. I don't think it will unless the stock market crashes, which, there's always a possibility. Anyways, that is it for my video. Thanks for watching. Subscribe for future updates, and I hope everyone has a great day. Bye.